Wall Street closes lower on Friday. Indices close lower for the straight second week. Its concerns over state of the U.S. economy weigh on sentiment. Asian markets open lower, while the SGX Nifty 2 is indicating a weak start for the Indian market. Retail inflation drops to a 19-month low of 4.7% in April, lower than the CNBC TV 18 poll of 4.8%, allaying all fears of any rate hikes from the RBI. The industrial output index for March falls to 1.1% as compared to a poll of 3.8%. Tata Motors delivers strong numbers across businesses, while CV business margin hits a 17-quarter high. DLF2 delivers a strong set with record bookings and collections, while DMart reports lower than expected margin, profit and EBITDA growth. They too lag street estimates. HPCL delivers an all-round beat in the fourth quarter, led by higher than expected revenue and gross refining margins. IGL reports an operational miss as margin improves but still comes in lower than street estimates. The Congress sweeps Karnataka, winning 135 seats to comfortably cross the halfway mark of 113 seats as anti-incumbency hits the Saffron Party hard. Congress veterans Siddaramaiah, DK Shivakumar and G. Parmeshwar are top contenders for the CM post. With the Karnataka rout, the BJP has also lost its bastion in South India. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. It's a fresh new week, Monday morning. A lot to catch up on. But before we talk about domestic cues, let's take a look at what the global markets and specifically Asian markets are doing. Weak handover from Wall Street, and that is something which is reflecting in the Asian markets as well, largely on the red side. Hang Seng is up, but it's absolutely flat with some positive bias. While we have the Taiwanese index down around 23 points, the others, the likes of Straits Times, we have something like a Kospi, all of them are down anywhere between 0.3% to 0.4% in trade currently. The fear around US economy is something which is giving global jitters, and SGX Nifty, which will come up for you on the screen, is indicating that the start for our own markets, that could be in the red. 40 points lower is what the SGX Nifty is indicating. That's how our markets could open as well. But let's talk about the US markets. Wall Street ended Friday's trading session lower, with key indices posting marginal losses. For the week, the S&P 500 and Dow lost 0.3% and 1.1% respectively, while the Nasdaq Composite advanced 0.4%. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
Markets finishing the day and week lower, dragged down by concerns about the U.S. economy and regional banks. The Dow ended slightly lower. The S&P fell almost 0.1%, and the tech-heavy Nasdaq fell 0.35%. Elon Musk confirmed that former NBC Universal ad chief Linda Yaccarino is joining Twitter as its next CEO starting today. Musk says Yaccarino will focus on business operations at Twitter while he focuses on product development. It comes as Musk tries to turn Twitter into what he calls an everything app, and as Tesla investors have been calling on Musk to turn his focus back to the car company. Worth noting that NBC is CNBC's parent company. And First Solar shares surging double digits today, hitting a new 52-week high. This comes after the company said it is acquiring Evolar AB, a developer of thin film used in solar panels, in a deal worth up to $80 million. That's what's happening here in the U.S. Back to you in Mumbai.
Okay, that is some action on Wall Street. On that note, here is some expert opinion on the U.S. debt ceiling issue, the dollar trajectory and the Fed's rate trajectory.
We are getting questions on the debt ceiling in every meeting we're doing. You're starting to see some of that nervousness reflected in markets. One of the charts we created this morning actually showed that one-year credit default swaps for the United States are priced higher than those for countries like Brazil, Mexico, and Greece. But at the end of the day, our base case is still that this debt ceiling issue gets resolved before that X date. But nonetheless, we're offering clients ideas and ways to hedge the potential event risk, like adding to gold exposure, et cetera. But for now, it's stay the course, doesn't change our conviction in things like core fixed income.
Okay, all right, that's a global market action. How will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. A lot to catch up on, right? Rima, so tell us, what are the cues we are watching out for in today's trading session?
Well, for starters, the SGX Nifty is suggesting a slightly negative start to begin trade with, taking cues from Wall Street, Wall Street on Friday ended with minor cuts, but the S&P 500 lower for the second consecutive week. The consumer sentiment data was disappointing. It fell sharply to a 6-month low of 57.7 in the month of May. This is much lower than the April number of 63.5 and well below what the consensus estimates were. Separately, Congress has won the Karnataka elections. This, the sweep, the extent of the win came in as a bit of a surprise. So maybe the markets are a tad bit disappointed. CPI inflation, on the other hand, was the other macroeconomic indicator, came out on Friday post-market hours at 4.7% in the month of April. This is the lowest that we've seen in the last 18 months. Back to our own markets in terms of cues, the FIs bought in the cash for the 12th consecutive day on Friday. They bought more than 1,000 crore in the cash market, while the DII sold 922 crore. Results over the weekend and on Friday post-market hours that the Indian markets will react to were pretty okay. Tata Motors was good, Colgate, Avenue Supermarts. No major disappointment on the earnings front. But this week, the street will track numbers from Bharti, ITC, State Bank of India, which come out on Thursday. On Friday, JSW Steel, NTPC, Power Grid. And on Saturday, we've got Divi's Laboratory. Back to you.
Okay, all right, Reema, thank you so much for that. So a lot of numbers which are expected. So those stocks will be in focus, but of course, the other ones as well. Surbi has that list. Good morning, Surbi.
Hi, good morning. So a whole host of numbers that have come over the weekend. Let's start with IGL. The revenues were flat sequentially. The EBITDA was up 9%. The operating margins did improve but was lower than what was expected. The operating margins came in at 12.6% versus expectations of 13.8%. Avenue Supermarts, the revenue was up 21%. The EBITDA was up 4.4% and the margins came in at 7.3%. Max Financials, the VNB margins were lower on a year-on-year basis. The APE growth was supported by higher share of non-par savings products. Next is Naveen Fluorine. It was a strong set. The revenue was up 70%. The EBITDA was up 114%. And the operating margins came in at 29% versus 23% same time last year. AMI Organics, again, a very strong set of numbers. The revenue was up 30%. EBITDA was up 58%. And margins came in at 22% versus 18%. DLF, the bookings were at a record high of 8,458 crores. The collections were again at a record high of 1929 crores and it generated a cash of 1369 crores. And lastly, Adani Enterprises board approves a fundraise of 12,500 crores via a QIP.
Okay, all right. A lot of stocks right in focus. Thank you, Surbi, for that list. Finally, let me go across to Nigel, joining in with all the cues from the FNO space. Hey, Nigel.
Well, morning, Sonal. You know, the FIs, they continue to buy. However, the quantum has come down a little bit. And if you look at the FI and the DI data together, I look at that together and it's a net institutional flows. That's a tenth of what we are seeing on an average in the last 10 days or so. That number is less than 100 crores. So just keep an eye out on that factor. From the FNOQs that we have, the premium on the Nifty came down sharply to around 20 points in comparison to nearly around 50 points out. So the worry was, is there some big shorting that's happening out there? But it appears there was more amount of unwinding because the Nifty Bank, both of them did see some unwinding. The FIs as well, they unwound both longs as well as short positioning. They continue to remain net short with around 54% of their positions on the short side. On the option side, they bought both calls as well as puts. But on the writing side, they're still writing more puts than calls. Now, that's giving you a sense that maybe at lower levels, things will get protected. And the options data as well, 18,200, 18,000 put. Well, between them, they added close to around 50 lakh shares or thereabouts. So that's telling you that maybe at lower levels, we have some bit of a near-term base or near-term stop loss that we can look at. On the upside, though, 18,400, the bears, they want to come and fight for that. Even last week, we saw the Nifty attempted to go to that mark, but it is selling pressure did come in. So the Nifty, the levels we're tracking, 18,100, 18,150. Risk reward could favor the bulls closer to these levels. So you're seeing a 30-40 point downtake on the SGX Nifty. If you get a little wider gap down, that will be better from a bullish perspective, actually, because it's giving you an opportunity to get in. And the Nifty Bank, that's been in a world of its own, in fine form. The stop loss out there is around 43,300. Till that level holds out, you'll pretty much think that, yes, the uptrend is intact. So let's see how this goes. For starters, though, SGX Nifty suggesting some red. Back to you.
Okay, all right, Nigel, Surbi and Reema, thank you so much for joining us and prepping us up for this trading day ahead. Moving on from markets to some important news from the world of politics, Congress wrests power from the BJP in Karnataka, winning a landmark 135 seats as anti-incumbency and development issues hit Saffron Party hard. After heated campaigns and star-studded rallies from the BJP, including by the Prime Minister Narendra Modi, the results were more one-sided than many would have imagined. Congress cruised past the majority mark with 135 seats in the 224-member assembly, while BJP had to settle for 66 seats, while JDs played kingmaker last time. This election delivered a clear majority to the Congress senior party leaders D.K. Shivakumar, Siddaramaiah and G. Parameswara, who are the top contenders for the Chief Minister's post. Congress National President Mallikarjun Kharge has been given the responsibility to pick the CM. The key contenders are set to hold a meeting with the Congress President in Delhi today. Okay, all right. On that note, we'll slip into a break, and up next, we'll get you up to speed with some earnings we are tracking. Stay tuned for that. Welcome back. Still tuned into Power Breakfast on CNBC TV 18. India's retail inflation dropped to a 19-month low of 4.7% in April, lower than the CNBC TV 18 poll of 4.79%, allaying all fears of any rate hikes from the Reserve Bank. However, the industrial output index for March has fallen to 1.1% as against a poll of 3.8%. Lata Venkatesh is here to decode the numbers. Lata.
The more important story is the IIP and not the CPI. Normally, we concentrate on CPI because that is the number which the MPC uses to make policy. It is mandated to keep inflation between 4% plus or minus 2%. So CPI is important. But it's come in at 4.7 compared to our expectations or our poll of 4.79. So that clearly indicates that the Reserve Bank, which paused in April, will not have any reason to change its decision in June, because the last number it gets for inflation is this April CPI number, and that is moving closer to 4%. So they will have little reason to move. It's the lowest number we've got in about 19 months. CPI food is also coming in at 3.84%, which clearly shows that all those wheat procurement worries about late monsoon, worries about untimely rains are all nullified, and food prices have indeed fallen. In fact, cereals prices in March are lower than they were in April, according to the index number. Therefore, worries on inflation are more or less ebbing at this point in time. The bigger worry is the growth worry. IIP coming in at 1.1% against a CNBC TV 18 poll of 3.8%. The April to February number average is actually 5.6, and therefore this 1.1 is seriously a worry. It comes on the top of a 3.6% core sector growth, clearly indicating that there are worries on the growth front. Just for the internals, the big worry is power. Electricity is minus 1.6. Now that clearly indicates that there's something wrong with the consumption as well. And then consumer durables and non-durables are both weak. Consumer durables contracting by over 8% and consumer non-durables by over 3%. Both these are worries because the consumption engine and the power consumption engine are indicating that there are problems on both sides, industry and as well as consumption. So here is a growth scare coming from the macro numbers that we got today.
Lata, thank you so much for making sense of these macro numbers. In fact, let's also listen to what the RBI Governor Shaktikanta Das had to say about the inflation numbers at Amitabh Kant's book launch event on Friday.
It was very satisfying to note that the consumer price inflation last month it was that is in the month of March, which data was released in April, on April 12th. The consumer inflation, the headline inflation was 5.7%. And the inflation number for April, which was released today, 5:30 p.m., as I was just about to leave office, was 4.7%. It gives me and my colleagues in the Reserve Bank to say with reasonable amount of confidence, in fact, I would say with good amount of confidence, that the monetary policy is on the right track.
I'm tempted to ask you whether today's inflation print will change your stance from a hawkish pause to a dovish pause. And the other question I would have asked you, if you're please feel free to answer, is the 10-year bond yield below 7% at a fresh 13-month low, sir.
I'll move to the audience with just one sentence.
I'm trying my luck.
One sentence. 10 a.m. on 8th of June, you will know what the policy is.
Okay, June 10 a.m. and you know where to tune in, right, to get all the updates as far as RBI's policy outcome is concerned. That's about the inflation number and macros. Let's get you some updates on some earnings we are tracking this morning. Tata Motors delivered a strong fourth quarter number. Sonia is here with the analysis. Sonia?
Well, thanks a lot for that. As you rightly pointed out, Tata Motors delivered very good set of numbers. On the operational front as well, the numbers were a beat across businesses. More importantly, the net auto debt for the company has reduced almost 14,000 crores quarter on quarter and now stands at 43,700 crores. The CV business EBITDA margins have now improved to a 17-quarter high of 10.2%. And the management is now targeting more than a 6% EBIT margin in FY24 overall. The India business net debt is now the lowest that the company has seen in the last 15 years. So just to give you a sense of how the consolidated numbers have looked, the revenue growth has been in excess of 33%, the EBITDA has gone up by 58%, and the margins have improved to 12.4% versus 10.6%. Also, the profits are much higher than what the street was estimating, so I think the stock will open well in the green. If you look at the highlights from Jaguar Land Rover, Q4 was very strong, a revenue growth of almost 50%, volumes up 24%, and the EBITDA margins improved 200 basis points on a year-on-year basis because of an improvement in demand. The net realizations were also up about 20%. And more than that, the balance sheet is well on track to, achieving the targets that the company had laid out. They saw a strong free cash flow of 16,600 crores in the second half of the year. And the full year auto free cash flow is positive at about 7,800 crores. So I'm expecting the stock to open in the green today.
Okay, good numbers from Tata Motors. Thank you, Sonia, for making sense of those numbers. Moving on, India's G20 Sherpa Amitabh Kant published his book, Made in India, 75 Years of Business and Enterprise at the Capital last week. On the sidelines of the event, my colleague Santhya spoke to him about India's economy and growth story. Listen into what he had to say.
My belief is that we need to become the third largest economy in the world. We also need to improve on our per capita income. Vast range of reforms are being carried out. Structural reforms have been made. We've made India far more easy. GST, IBC, lower corporate tax. All this should really drive India's growth in the coming years. More than that, we've created a set of young entrepreneurs through the startup movement, and I think we are now focusing on going green. So all this will put us in a competitive advantage by being digital, by being green, and that will really accelerate the pace of our growth in the coming years.
And so during all these G20 meets, on multiple occasions you have spoken about India's digital story, and it truly is an inspiring one. But talking about this story as well, now a lot is happening in terms of digital development. Artificial intelligence is that one thing. How do you see artificial intelligence impacting India's digital story?
So we are the largest amount of data. We used to be 123 in 2015 in the total amount of data. We are now number one. So if you want solutions, AI solution, the size and scale, the population scale solution, only India can provide that and no other country. So India can find solutions for the rest of the world from here to using AI and machine learning.
But our digital talent will also need some sort of, they need to be safe from exactly.
So all your IITs, all your triple IITs need to reorient themselves for the skills of tomorrow in terms of creating more product developers, more skill, a huge amount of restructuring of curriculum, which the new education policy envisages should be done.
So my last question, as India is heading to the presidency, G20 presidency is all set to, it's going to be over. What exactly do you think the other countries will be parting? What will be our parting message to them?
Vasudev Kutumbakam, one earth, one family, one food.
Okay, all right. With that, we'll slip into a break. And when we come back, we'll talk about commodities. Stay tuned for that. Welcome back. You're watching Power Breakfast here on CNBC TV 18. We spoke about macros, about markets as well. It's time to talk about the commodities space. Manisha Gupta, as always, is joining us with all the updates from there. Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with the crude oil prices, where we have seen further slippages coming in. Remember, the prices have declined by 14% in past 4 weeks, and the latest news suggests that the Saudi Aramco has cut official selling price for Asia for the month of June. But having said that, China refiners are asking for lower supplies for June, and that is weighing onto the markets. In the other sectors, metal prices have continued to see further decline. Nickel, if you look at that, is trading at a 7-month lows right now, as we are looking at production increasing there. Well, the construction activity in the first quarter of China fell by 20% year-on-year. The China new bank loans have seen a decline in April. We've seen construction numbers coming on the weaker side, and so has been the case with the producer inflation numbers as well. So that's weighing on. So you have iron ore trading at a 5-month lows. Steel prices trading at 4-month lows. Zinc at a new 26-month lows. So yes, there is pressure that's continued in metals even in the morning today.
Okay, some pressure on metals. Thank you, Manisha, for joining us with that take. So that's all about commodity markets. Moving on now to some international news. President Erdogan's 20-year rule could be at an end, with a runoff election looking increasingly likely, as both the ruling AKP party and opposition party CHP look unlikely to reach the 50% mark for an outright win. This, of course, is in Turkey as of an hour back. Turkey's election council said that about 92% of the votes had been counted, with Erdogan having a 49.5% share and rivaled with a 45% share. A runoff election, if any, will take place on the 28th of May. Moving on, in a landmark victory for pro-democracy democracy groups, Thai voters oust the military-backed government in the national election after nearly a decade of royalist military rule. Thailand's opposition parties won a high-stakes election, delivering a crushing defeat to the parties that allied with the army. In a nail-biting finish, the key opposition pro-democracy Move Forward party and the few Thai parties secured 99% of votes counted. The Move Forward party chief declared it had closed the door on any chance of the conservative military-backed allies forming a minority government. Okay, a lot of action in the global political arena. We'll keep tracking that for you. For now, we'll take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating a lower start for our own market. Stay tuned. Bazaar Morning Call comes up next.